Welcome to the Business with Beers podcast. This is the place where we help entrepreneurs expand their business, build their wealth, and generate passive income. I'm your host, Brian Beers, an entrepreneur who's on a mission to inspire growth from everyone around me. Remember that you need to take the actions others won't, and you can live the life that others don't. Please be sure to check out my weekly newsletter that now drops every Thursday. It includes one quote, one tweet, one podcast recommendation, plus some business and investing insight from me. It's short and it's sweet. My goal is to provide you with just a couple gold nuggets to help inspire your growth. Go to brianbeers.com to subscribe. Hello, everyone. Welcome to the show. I'm excited today to bring you Carlos Rovira. Carlos is a real estate investor and owns a full-service property management company down in Miami. Welcome to the show, Carlos.
What's up, Brian? Happy to be here.
Awesome.
Humbled.
Cool. So to start, do you mind giving us a little bit of your journey? Maybe start at 18 years old or so down in Miami and then kind of to where we're at today?
Yeah. 18. See, what was I doing at 18? I was in college at the University of Miami studying engineering. I grew up my entire life in Miami. Was born into a Cuban-American family. So lived in Miami my whole life. Got my degree in 2008 from the University of Miami in software engineering and went straight into the workforce. Put on my big boy pants and went in and worked into the tech industry. I got a job at Yahoo the Monday after graduation. Didn't even take a day off. So anyways, I get into the workforce, and this is 2008. So the economy is just on a downward spiral. And like 6 months into my working there, like the entire office or half the office gets laid off, like this mass layoff. And it was a huge eye-opening experience, obviously, because I was young and I thought that once you graduated from college and studied something that was worthwhile and got a job at a good, well-known company, that you were pretty much set for life. That's obviously not the case. So it was a big reality check for me. To see people just get fired in one day, people who had been working at a company for, 15 years, just get, pack up and leave. It was traumatic, to say the least. I was lucky I didn't get fired that day because I guess I was just, one of the lowest paid employees and, new guy. And I'm a hard worker. So, I guess they kept me around and I never got laid off, but, that sort of led me down a path of learning, and I discovered real estate, and I discovered the wealth building power of real estate, and how you can essentially build this portfolio of income producing property that produces income for you whether you're working or not. And passive income isn't really passive most of the time. I mean, there's a lot of work that goes into managing a rental portfolio, but in theory, you can't really get fired from that, and you can easily replace yourself and still benefit from that income. It's not like having a job at a company, or once you quit, you're done. Or once you get fired, you're done. So yeah, I mean, I became sort of intoxicated with this idea of just building a rental portfolio. My wife and I bought a duplex when we first got married, and we house hacked it. So we lived in one side and we rented out the other. So that was very helpful to sort of build up the savings to continue buying. And, we just kept buying duplexes and little multifamily properties. Before we knew it, we had a nice little portfolio, and, it became sort of a waste of time at that point to have a job. So, left my W-2 job in 2016, never looked back, been investing since then. And more recently, I've been buying some larger stuff. I partnered up with somebody, with my partner, who's now my partner in Kansas City, Missouri, and we've been buying some larger commercial properties. So we can get into that as well.
Yeah, awesome.
But yeah, I mean, and then surrounding all of this is my property management company. I came to the conclusion years into I hired a bunch of property managers, 2, 3, 4 different companies that kind of screwed me over. So I eventually just decided to start my own property management company, which then services the entire portfolio. So that's kind of what keeps me busy.
Cool. Tons of great stuff to unpack there. I guess my first question is, what's your favorite Cuban restaurant?
La Carreta. I've been going there since I was a little kid. The one on Bird Road.
Okay, I've been there. One. Yeah, but you're leaving the airport going like south, right, towards towards the UM. Yep, and you turn left, and it's right there.
Yeah, that's the one where they rally every time Fidel Castro dies, because he's died like 7 times in my lifetime.
Yeah,
and that's usually where you go when Fidel dies.
Okay. So yeah, awesome. Fantastic. Yeah, lots of stuff to unpack there. So how many units do you own today? I guess what's the breakdown look like turns residential and some of these bigger deals?
Yeah, great question. So I think we have about 200 units under management right now. I would say probably about half of those, maybe about 80 units of those are third party. So we manage for other people. And then the rest are either units that my wife and I own 100%, or we've syndicated and own a percentage of with a group of other investors.
Okay. And a lot of those are in Miami, or some of these bigger ones out in the Midwest. What's that look like geographically? I've
pretty much sold out on everything I own in Miami. The market here has appreciated so much that it's sort of foolish to not sell. So I've rolled most of the equity that I built up in the Miami portfolio into a portfolio in Kansas City, Missouri. So I'm heavy in that market. It's still relatively expensive. You can still find decently cash flowing properties. So we're in there, and we've developed a team there, and for the foreseeable future until the deals dry up, we're in that market.
Yep. Okay. Yeah. One of the things you said I thought was interesting is like, passive income's not really passive. And I've been thinking about this a lot lately too. And I've come up with these, like, there's like 4 buckets, I think, right? Of like passivity. I think the top is someone who's pure passive investor. So this would be someone, I guess, probably as an LP in one of your deals, right? They give you money, and then they're done, right? So for them, it is truly passive. Then there's this other one that's like, you do a whole bunch of upfront work. Maybe you got to go buy like a triple net lease property or something. There's a whole bunch of due diligence you got to do, right? But then once you do it and it's all set up and it's funded, then it just cash flows, right? And then there's this one, I think that's like a 50-50. It's kind of like, this is what I think residential properties, so it's like a pendulum that swings where, sometimes when you own rentals, there's like a ton of work you got to do, with unit turns and tenant turnover and evictions and all this stuff, right? And then there's other days you probably get no calls, and it feels more passive. And then finally, I think the lowest level is just kind of leverage, where you're looking to expand your business. And this is probably more kind of your realm, where you've already got all this work, right? These units under management. So you go and add another, 20 units or something. Like you're not spending any more hours. Like you're still working the same amount of hours, but now you got more income coming in. So it's kind of passive because it kind of folds into your systems, right?
Yeah, I mean, as long as you're involved in the management of the portfolio, it's never really passive, because there's always going to be something. Like you said, though, it is kind of like a cyclical workload. I mean, if you're early on in an acquisition and you're a value add investor, which is what we are, we buy underperforming things and we turn them around. In the beginning, when you first acquire or when you first take on the property, there's always a whole bunch of messes that you inherit and that you have to fix. So there's kind of like this very it's like this marathon that you run in the beginning, where you're plugging up holes and you're improving different things and you're fixing different problems. And then it sort of levels off and it becomes more passive, never 100% passive, because if you're the property manager like we are, we're actively collecting the rents and maintaining and dealing with maintenance issues. But yeah, the brunt of the work is always in the beginning, if you do it right. I mean, if you're adding the value you say you're going to add to the properties, then you're going to have a whole bunch of work in the beginning, and then it sort of levels off. But since we're always buying deals, I feel like we're always in the value add stage, because just as soon as I finish one, I'm already moving on to the next one. So, we're never really passive at the end of the day.
And do you still live in Miami?
Yeah, live in Miami.
Okay. And then you have partners that are in Kansas City?
My partner Alfredo lives in Kansas City. He moved up. He's actually a Miami guy. He moved up there because his wife went to go do her PhD up in Kansas City. So it's an interesting coincidence. And so we partnered up. He was working at the university up there in like a fundraising role. So when I met him, I told him, look, man, you're good at raising money. I can find deals and manage them. Let's try to put our heads together and buy some larger stuff. So we've been at it for about a year and a half, and we've picked up three commercial properties that we're actively in the value add stage and we're looking to do more deals hopefully this year.
So what's your role in the company? You finding the deals, negotiating, because you're remote, right? You're not hands on there.
Yeah, cool, good question. So my company is the property management company. We have a third partner. His name is Jake, who sort of we've offloaded the underwriting of new deals to him. Alfredo, sort of the he's for sure the money guy. He raises the money, brings the investors, and then he's boots on the ground. So if there's a major issue, I always just call Alfredo. We handle the property management from the back office perspective. So all of the rental collections and the processing of maintenance issues and accounting, everything gets done out of Miami. And then we have 2 employees that we hired in Kansas City that sit in our buildings, and then they're the ones that we delegate anything that needs to have a physical presence for.
Okay. Do they do the on-site maintenance and like physical things, or just more they're like the people to go change locks or like do little things?
They're more the coordinators of that sort of stuff. So we have another maintenance guy that we call who deals with all our maintenance, but these property managers will be the ones to call the maintenance guy and be on top of that sort of stuff, and then take tenant requests. Meet with different vendors and stuff when we have work that needs to be done. They're the boots on the ground, essentially.
Yeah, I think that the big thing to keep in mind with a lot of this real estate, it's a team sport, right? You need different people with different skill sets. And it sounds like for you, it's probably the back office and the team and kind of the numbers guy for a sense of it. Is that?
Pretty much. Yeah. I mean, we direct and we delegate accordingly. We look at the bigger picture. We're also the asset manager. So we're looking at, a holistic view of the property. And yeah, I mean, on the employee side, whenever, again, it's not really passive income. Now we have a team of people that we have to actively manage. So there's work there.
Yeah, sure. Well. Yeah. Yeah. For you guys, it's a job. It's for the investors that it's passive. Like that's
exactly.
That's the benefit. Like I'm a passive investor in a bunch of deals, and that's what I do, is because I don't have the time to do what you're doing, to find properties to manage, to do all that stuff. I'd rather focus my time on my business to grow it, and then take some of that income, right, and invest it with people who can be 100% dedicated to, 40, 50, 60 hours a week, whatever it takes to make it successful. So I think that's a big differentiator for, once again, it's like the team and what role each person plays. So, what's the office look like? Is it remote employees for you, or is everybody in person in Miami? What's curious on that?
Yeah, I mean, we're a small team. My wife and I, we sit in Miami. She's our COO, so she manages the employees. So she and I sit in Miami. We have a virtual assistant who answers the phone, and then we have our 2 employees that sit in Kansas City, in the buildings in Kansas City. And then Alfredo is, he's a floater. Okay. He sits in Kansas City as well.
Good. What's your strategy for finding properties? Or what's like your ideal thing to buy? Is it focused more on commercial? Is it worth picking up more these smaller things if they fit into your existing systems? What does that look like?
On the personal side, I mean, I'm still buying duplexes as they pop up if they're if the cash flow is good. That's on the personal side. On the syndication business, obviously, it's not really worth it to buy duplexes. So we're doing larger deals. We started off in looking for multifamily, but man, everybody wants multifamily nowadays. So it's just so difficult. Yeah. If you don't have those existing broker relationships, then it's kind of hard to break through to that. So we sort of ended up repositioning into office buildings, believe it or not. In the middle of a pandemic, when everybody's working from home, we decided to start buying office buildings just because the deals were there, right? I mean, those were the most distressed commercial properties at the time.
And you're syndicating those?
We're syndicating them. It's definitely been challenging, one, to convince investors to buy office buildings. And 2, the leasing efforts has been crazy. It's just so difficult. Probably for every 20 leads we get, we'll get 1 person submit an application. So that's been a real hustle. And Alfredo's been awesome at that. He handles leasing because he's in market, and man, he's been awesome at following up and finding tenants and canvassing. And so.
Can you walk me through one of those deals? I think I've seen you post on LinkedIn about it, or you're taking these buildings and they look pretty good too. Like some of the work you've been doing to them.
Yeah. I mean, the properties have been so inexpensive that, like, we bought one that was a 24,000 square foot office building built in the 1970s. It's kind of has old, like, concrete block type construction, really ugly, really boring looking building. We bought it for $350,000. It's so cheap. I mean, my house in Miami you can't buy a house in Miami for less than $1 million nowadays. It's just ridiculous. So it was just so inexpensive, but the building was derelict. I mean, there were crackheads living in it. This one guy had like overrun the property and he was renting out to all his buddies. And there was like, a homeless guy living in one section of it. So we had to vacate the building, which was difficult, and then basically renovate the whole thing. So we raised $350. We bought it for $350, and then we raised an additional $350 to do the renovations. So we're all in for about $700,000. And we're basically done with the renovation already. And we have already, I think we're at 12% leased in about a month and a half that we've been leasing. So, we're hopeful that by the end of the year, we can be in a position where we could just cash out, refinance, pay back the investors, and then have a nicely cash flowing building. Okay. That was an extreme case. I mean, we bought another one that was like 70% occupied that was already more or less stabilized. We bought it at a 7 cap. And then it was just a leasing play, and we've been filling it up. We're almost at 100% occupancy. I think we hit 90 recently.
Okay. In that the derelict building there, what do you expect that to cash flow once it's occupied in the 90s?
I had a conservative cap rate of 16%, which is crazy, and I was using like pretty conservative numbers for expenses. I'm pretty sure the expenses are going to be a lot lower, and very low rents. I mean, we're charging $10 a foot when office real estate in that market is $13-14 a foot. So we're literally the cheapest building in Kansas City,
and newly renovated, and it's like a more hip style, right, with bright colors. Right. And
exactly. So I mean, I think we're positioned to win on that one. I mean, we just have to be patient and really put a lot of effort into leasing. But yeah, I mean, I can't remember the actual cash flow numbers off the top of my head, but I remember 16% cap rate was it. And pretty sure we can probably double the value of the building, the $700,000 investment, just by getting the thing leased up and refinanced. So,
yep. So is you going to continue down that path, or is this kind of like a little risk reward trying to play to see where it falls? What's your plan there?
Yeah, that was a risk reward. That building has taken a lot out of us. It was hard. I don't know that it was
Was it the first one too?
That was the second one. Okay. We have a third one that is more of a retail, like a triple net property that was just very badly managed. So that was just a management play and a leasing play. So that one's been easier. The Chrysler building, which is the one that we renovated, was tough. Alfredo's, he's crazy. He's been looking at this one that is even more derelict than Chrysler. And it looks like he's putting a deal together. It's early. I can't really say, but he brought in a GC and an architect. Like we've done it more. He's doing it a little bit more professional than like the
last time.
the bootstrap way we did it, last time. So let's see how that one works out. But yeah, that was a tough one. I mean, not something I really would go after. It was just that it was so cheap that it was like really hard to not buy it,
What's your thoughts on the difference between managing some of these the commercial tenants, like the retail, the office, getting those leased up versus dealing with the residential? Kind of pros, cons, like is there an area you're going to focus on, or that
it's a great question. It's definitely, I would say, easier to manage commercial in many ways, just because you're dealing with just more professional people and business owners. It is more difficult from like an administrative perspective, because you are dealing with businesses that have like their own processes for payments and accounts payables and different teams that handle leasing. So depending on who, we have government tenants that make us go through this weird government process to like get leases renewed. So administratively, it's a little bit more hands-on, easier because, you're dealing with more professional people. The maintenance is a lot more expensive on a commercial property, just because for office, for example, you're paying the electricity, you're paying for cleaning, it's full service. So you're basically paying everything. So there's more expenses and there's more things to manage from like an accounting perspective, and more vendors to manage than residential, where it's just like, mow your own lawn, pay your own electricity, and you're good.
Yeah.
So it's got its pros and cons.
Okay. Awesome. That's cool. So what, in terms of, is this growing your wealth? Is it all in real estate? Is there anything else that you do outside of real estate?
I'm pretty much 100% real estate. I got some stocks, but nothing. I mean, I don't really actively trade, and the property management really kind of takes up a lot of our time. So yeah, just for now, we're going to build up the real estate portfolio and see where that leads us. The benefits of real estate are definitely they materialize in the long term. So the longer you hold and the more deals you do, the better position you are for success.
Yeah, it's a long-term game. I need that short-term stuff. It doesn't work, right?
Yeah.
More that the buy, hold, build, pay down debt, all that. I think that's the key. And having good partners. Like I said, I've from experience, I know property management is a tough gig, and it's a hard job. So I think probably going in-house if you want to grow at scale is probably the way to go. Yeah,
it's a thankless job. You're always the enemy, even when you're trying to help people. It's a tough one. But we're good at it. I mean, I've always been a good problem solver. That's one of my strengths. So
yep,
it definitely helps in the property management world.
What would you say one of your biggest challenge or failures so far, in your investing career has been, and what'd you learn from it?
The biggest failure, I would say, is not having started managing my portfolio earlier. I definitely lost a lot of cash flows and wasted a lot of time trying to find a good property manager. Had I just started building systems earlier on, our business probably would have been larger than it is today. There's a lot of small failures in real estate. I mean, if you start off investing with a duplex and you're the only, you're the landlord and you're kind of bootstrapping it, you make a lot of mistakes along the way. That's how you learn. It's the school of hard knocks.
Mm-hmm.
And that always leads to more opportunities and more learning, and you can always pivot. Real estate is a very forgiving business, because since you're in it for the long term, as long as you hold on for long enough, you can reposition and correct any wrongs that you made over the course of holding the property. So,
yep. Any tips or advice for someone who's looking to buy their first property?
Yeah, just do it already. Stop wasting time. I hear so many people say, "Oh, I'm waiting for a crash," or "I'm waiting for values to go down." I'm waiting for, I don't know. I mean, what are you waiting for? You're going to be waiting forever. There's always going to be something to wait for. And real estate, like I said, is the benefits of it are seen in the long term. So the sooner you buy, the sooner you will realize that wealth. And just because rates are high and just because prices are high, it doesn't mean that it's the wrong time to buy. If you can buy it, and if you can hold it, and if you can carry it, and if it cash flows, just do it. I mean, just do it.
Wait, when did you buy your first one? What year? 2009. Okay, so right after. That was a house hack, right?
That was a house hack. Man, stuff was so cheap back then. I wish I had more money. I would have bought everything.
Yep, that's awesome. Anybody who's been like a mentor or coach in your life, like, what'd you learn from them?
Yeah, my uncle. He's a real estate attorney. His name is Bob. He helped me a lot in the beginning. He was actually one of my first partners. We bought a couple duplexes together in the beginning, and he was great because he was very passive, but then also he would give a lot of advice. I mean, this guy is a real estate attorney. That's all he does. And then, I read a lot. So a lot of the cliches, like the Robert Kiyosaki's and the Gary Kellers and, all the well-known writers that we know and love. Those have been great. I mean, all those books have been just amazing. Any
specific favorite book that you found?
The E-Myth by Michael Gerber is a great book. There's so many, man. It's been like 13 years of me reading nonstop books. The Rich Dad series obviously is classic for anybody who ends up in this world. More recently, the Dan Sullivan books. Have you read those? The Who Not How and The Gap and the Gain.
Yep.
Those books are awesome. There's so many. Like, I'm probably forgetting. Look at my little library here. There's just so many awesome books. Oh, the best ever, the Joe Fairless book, the best ever apartment syndication book. That book's awesome. That helped with the syndication business.
Yep.
I mean, I could be here forever talking about books.
Yep. That's awesome. Cool. So where can listeners connect if they're interested in hearing, I guess, more from you, if they're interested in any, maybe the investments you got going on?
I'm on Instagram. The handle is the Carlos Rovira. Yes, I had to put the word "the" in front of my my name. Somebody else had taken Carlos Rovira. So the Carlos Rovira on Instagram. I have a Twitter account also, the Carlos Rovira, same handle. I try to post as much as I can and, share what we're doing. I'm not the most creative person, but I do what I can.
Yeah. Awesome. Well, it sounds like you're doing some interesting stuff, especially with these office buildings, trying to flip them around, and, could be a good niche, and you never know where it could go. So
yeah, man, we're excited. We're excited to do more deals. It's gonna be awesome.
Awesome. Cool. Well, I appreciate you coming on and sharing your story today. And like I said, I think it's been great to kind of hear your journey, and I appreciate it.
Of course, man. Happy to be here. Excited. Thank you for having me.
Thanks.
All right, man.
That's all we got for this episode with the Business with Beers podcast. One thing that would really help both us and other new potential listeners is to rate the show and leave a comment in iTunes, Stitcher, wherever you listen. Also, make sure to link up with me on your preferred social media platforms, LinkedIn, Instagram, Twitter, Facebook. You can find all my links at brianbeers.com. Please just share the podcast with anyone who you think might enjoy it. And until next time, remember to take the actions others won't, to live the life that others don't.